Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about XPENG-W interim report. XPENG Inc. offers a diverse range of businesses and services, including design, development, manufacturing, and marketing of smart electric vehicles, EVs, such as 7, 9, G6, X9, Mona M3, and 7 Plus Smart in-car operating system. XOSTNG Powertrain Solutions, SEPA2, a smart electric platform architecture, various services including plus embedded services in sales, contracts, plus supercharging, plus maintenance, plus technical support, plus research and development, plus second-hand vehicle sales, plus insurance technology support, plus automotive loan referral and auto financing services. The skyrocketing stock price of XPENG-W. A confluence of positive news and strategic developments over the past year, XPENG-W's stock price has surged by as much as 126% to 134%, driven by a combination of robust financial performance, strong vehicle deliveries, successful new model launches, insider buying, strategic partnerships, international expansion, analyst upgrades, and Chinese government stimulus. The company's revenue and net income growth have been impressive, with a 147% increase in vehicle sales in the second quarter of 2025, contributing to a 125% year-over-year rise in overall revenue. XPENG's optimistic outlook for the third quarter, projecting year-over-year revenue growth between 94% and 107.9%, has also boosted investor confidence. The company's successful new model launches, such as the XPENG Mona M3, have fueled optimism, while insider buying by CEO Xiaopeng, he has signaled strong confidence in the company's future prospects. Strategic partnerships with Volkswagen Group and Vivo have further enhanced XPENG's growth prospects, particularly in areas of technological advancements and international expansion. The company's efforts to expand globally have shown promising results, with a year-over-year growth exceeding 137% in overseas deliveries. Analyst upgrades by HSBC and Goldman Sachs have also contributed to the surge in XPENG-W stock price, as these firms have increased their price targets and upgraded their ratings. Overall, the confluence of positive news and strategic developments has driven XPENG-W stock price to skyrocket over the past year. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. The main contributors to revenue growth are vehicle sales, services and other revenue streams, and embedded products and services through contracts. Additionally, financing arrangements, installment payments, and sales of household charging piles also contribute to revenue growth. Revenue decline drivers, on the other hand, inventory write-downs, cessation and upgrade of certain models, and excess dedicated raw materials due to model upgrades are primary drivers of revenue decline. Net income and profit margins. A shift towards stability, the financial performance of the company has shown a significant improvement in net income and profit margins over the past period. The net loss decreased by 46.6%, from RMB 0.65 billion to RMB 0.14 billion, indicating a reduction in losses. Profit margins have also seen an upward trend. Gross margin increased from 13.5% to 16.5%. While vehicle and services margins rose from 6% to 12.6% and 54.1% to 60.1% respectively. This improvement can be attributed to various factors, including cost-cutting measures, efficient resource allocation, and a focus on revenue growth. The increase in profit margins is a positive sign for the company's financial health, indicating that it is moving towards stability and potentially profitability. The company is generating positive operating cash flow, as evident from its net cash provided by operating activities of RMB 7.64 billion for the 6 months ended June 30, 2025. This significant increase in operating cash flow indicates a strong financial position and ability to generate funds from core business operations. The company's debt level and interest expenses have undergone significant changes. While the data is inconsistent across different pages, a clear trend emerges. The total debt level has increased from RMB 6.62 billion to RMB 7.51 billion, indicating a slight rise in debt. Conversely, interest expenses have decreased by 22.6% and 37.6%, respectively, suggesting that the company is paying less on its debts. This reduction in interest expenses may be attributed to various factors, including refinancing or restructuring of existing loans. Overall, The changes indicate a shift towards managing debt more efficiently, but further analysis is required for a comprehensive understanding. Management statements convey a positive outlook for the company's future growth. Despite near-term challenges, they are optimistic about the long-term trajectory, driven by investments in electrification and smart technologies. Key strategies include expanding internationally, enhancing brand recognition through marketing, improving customer services, and strategically building presence in international markets. Overall, management is focused on executing its business plan to ensure continued success as a going concern. The company's financial summary reveals that they have opted to buy back shares rather than distribute profits through dividend payments. This strategic decision indicates a focus on maintaining control and value within the organization. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup. The data indicates a significant increase in both finished goods, 463,084 units, and raw materials, 499,620 units. Furthermore, page 63 notes that excess dedicated raw materials have accumulated due to upgrades and the cessation of production. This surplus is compounded by accrued costs of purchase commitments, $844,209 in 2025, and losses on purchase commitments, $190,839 in 2025, as mentioned on page 76. These findings suggest a potential supply chain disruption and inventory buildup issue that requires attention. That concludes the financial summary. For XPENG-W, feel free to comment below, and I will be happy to answer them when possible.